What's up, you guys? Hope you guys are doing well. So today we're going to talk about a play that allowed us to get a 40% swing from around the 16, 17 area to selling off around 23. So some background info: Cosmos, aka Atom, is a cryptocurrency that recently got pumped up by YouTube channels, and it also ran up in sympathy with the euphoria in the crypto market right now. So it ran up a whole from around 7-ish, even lower, 6, and even back it's like 5 to almost 25 right now. That's a 500% move. Super crazy, right? So the way crypto moves is that Bitcoin tends to be the leader, so it moves first, followed by Ethereum, so that Ethereum usually copies Bitcoin's movements, and then other coins such as Atom copies Ethereum and Bitcoin too. So this is where we find out one saying: history doesn't repeat itself, but it rhymes. So we pull up the Bitcoin chart. The pattern that you'll see is that Bitcoin tends to run up for around 5-ish days, and then it tends to dump hard bits, usually around Sunday. See it again, runs up hard 4.5 days, dumps, ran up hard 4.5 days, dumps. So we can take advantage of this by taking it into context of the overall bullish market. So the bullish market will probably be around the end of the year, maybe August, September, October-ish, based on past history. It could be longer, could be shorter. But within this overall cycle, you can find mini cycles such as this one, like the 4.5 day pump followed by the half day dump followed by the repump again. So this creates an amazing dip buying opportunity, as these other coins such as Atom tend to lag in relation to Bitcoin's movement. So for example, you might not be able to catch Bitcoin's big dip as it happens first, as it's the leader. However, you could capture other coins such as Cosmos after it decreases in sympathy to Bitcoin, such as right here. So the question becomes, when do we enter? As you see right here, this looks pretty good, this looks pretty good, this looks pretty good, but it keeps dipping lower and lower. So to find great key price levels where we can enter, we look on the past channel it created after it ran up recently. So let's draw that in. We'll pull up the 1 hour time frame to make it a little bit easier to see. Okay, let's draw some parallel channels from when it started, the huge run up to around the 22 area recently here, and then we'll pull it down to the support at the bottom right here to capture most of it, and solid, and then keep going it right here. Okay, so now we captured most of the movements from the past week and a half of the bullish momentum, and we see that a good price level is around 18.8-ish. However, it dipped on even further below, so anything below this is a steal. However, we have to figure out when would be an ideal time to enter around, as it could just keep dipping around more and more and more. So we pull back. Let's draw some key resistances and supports. One at the all-time high. We'll ignore everything on the right side as that happens today. So we'll pretend we'll be like around right here. Okay. All-time high. Another key support has bounced off here around 19.8, 20-ish. Another key one right here around 18-ish, 18.5 level. Has it bounced off here too. Let's wait for another one around 17-ish again. And another key one around 15.5. And then another one just in case around 13, in between 14. As these get retested several times and they stay in between this horizontal channel. Okay, so we set notifications for the Heiken IHG candles, which help determine the momentum. We'll use a shorter time frame as these bounces tend to happen a lot more quickly. Okay, so we wait until the green candle appears. So it first appears around 17-ish area, which coincides to the previous support that we drew earlier. So this is a very good sign. And the RSI came to around 25-ish, which is also really good, as that indicates that's very oversold. However, after we buy in, it sells off even more, right? So we wait until whether it sells off even more below 14.5, the previous low, or it creates a higher low in which we would enter our position even more. So it ends up bouncing up even more, in which we would scale it even more. So if you want to allocate 6K into this, you can try scaling 1/3 at a time. So you can scale in 2K around 17, then bounces up a little bit, scale another 2K around 17 again. Then we'll see if it continues uptrending or not. So uptrends again, retest a little bit, bounces off 16.5, uptrends again, in which I would fully allocate the position around 17.5. So this is exactly when we switch to a higher time frame, as the bounce up will be a lot more bullish and we won't really have to worry about selling off as much. So having that higher time frame will capture the overall context of the market and will have less fake outs. So for example, it could just sell off a little bit, but then it'll just bounce off hard, as there's a high likely chance it will bounce off. So we said turn off the notifications at the Heiken candles for red and green momentum. Then we'll switch that to the 30-minute. So we'll see where it first starts selling off. Let's keep it going, okay? Starts selling off when it tries to reach around the all-time high a little bit. So you could sell off a little bit right here if you wanted to. So 6K, sell off to 4K. Then keep it going. But the all-time highs are on 22. So I would personally just let it run, honestly. Let's keep it going. Okay. Sells off a little bit, however, higher highs, higher lows. So we just continue letting it run. Keep it going. So every time the red candle appears, we get a notification. That's how we know when to check it. We're not constantly looking at the screen. So keep it going. We get a notification around 22 when it breaks off to 23. Okay, so this is when we look a little bit closer. Keep it going, okay. Continues to keep breaking all-time highs, okay, nice. Keep it going, okay. Let's wait until it either establishes a new support and goes up more, or if it downtrends even more, we take profits. Keep it going, okay. Sells off even more, a little bit harder, in which case I would personally lock into profits around 23.6 around here area. So 6K, take off 1/3, that becomes 4K, scale out slowly, okay. Keep it going. Wait whether it sells off even more or it starts uptrending again, establishes a new support. Keep it going, okay. You could sell off a little bit more here if you wanted to. Bounces up. We'll see whether it retests it or not, or it jumps up, or just keeps selling off, in which I would fully exit on the next candle. Okay, creates a little mini doji right here, a little green candle, so that's good for a bullish momentum. Okay, we'll keep it going. Let's see, oh, okay, sells off, in which I would personally recommend locking in all of your profits, so sell out the rest of the 4K or 2K, whatever you wanted to. And then keeps going up, so if you held on, you let 2K run the rest. That's awesome. However, I personally didn't do it. Alright, so some key plays for this play include having extra capital just in case for emergency situations like these. So crypto tends to sell off hard and it tends to run up hard. So you can take advantage of this by having extra cash on the side, so that when a situation like this happens, which tends to happen every 1 to 2 weeks, you can allocate even more capital, and then you can get abnormal gains as opposed to constantly going for shorter, small scalps. Second one is to keep calm during these sell-offs. So the go-to emotion and why 95% of people will lose money trading is that they panic. So we also were in other trades too. We lost around 20 to 30% on those, but since we kept cool and waited patiently for this dip to finish dipping and then started uptrending again, we were able to gain 40 to 50%, giving us a net profit of between 10 to 30% on all of our plays, giving us a net profit, growing our account. So the third key would be to keep in mind the overall context of the market, so not just the daily short-term movements. So if you go to here, when it was hovering around here, trying to break that all-time high of 22, if you get caught in the short-term movement, like you try to play in between 20.7 and 22, you can easily have it sell off on you really quickly. So the best position is often no position, right? So this means if there are any risk-reward ratios that are unclear, that are not optimal, like at least 3 to 1, for example, 21, if you're like I hear 20.6, the risk-reward ratio is maybe 1.4. However, it could drop down to easily at least 18. So that's 1.4 to 3. So that's a negative 0.5 risk ratio. Or you have a higher downside. Your downside's twice the amount of your upside. So that doesn't make sense. So around here, you could just ignore all that movement. And lastly, try to analyze from higher time frames. So 1 hour, 2 hour, 4 hour, to keep in mind the overall context of the market and not to get caught in these short-term movements, such as between here where there's unclear reward to risk ratio, and to just be patient, as since we were able to take into account the overall context of knowing that Bitcoin tends to sell off every 5 to 7 days, and other coins such as Atom selling off in relation to that too, we were able to be patient and wait for that big dip for us to net this 40% play. So hope these tips help, and talk to y'all next time.